Hello, I'm Roger Upton, and I'm one of the directors at MS Consultants. Now imagine one of your best clients just gave you a phone call. They're going to be spending about $75,000 to $100,000 on roof work for one of their buildings this upcoming year, and they want to know what the tax answer is to these costs. In other words, the old repair versus capitalization question. Now this question actually has two different levels that you have to be concerned with. The first level is timing of the deduction. If it's considered a repair, immediate deduction, immediate tax benefit to the client. However, if it has to be capitalized, and the IRS has been stricter in this area over the last few years, you're looking at it being capitalized as part of the building, which means you're going to be depreciating it over 27 to 39 years. So you can see the timing of the deduction between a repair versus capitalization is huge. Now the second issue, which is a lot more important, is this. Over the last 8 years, a lot has happened in this area tax-wise. The IRS lost a court case, the Federal Express Corporation case, which was very favorable for taxpayers. And since then, the IRS has issued 3 sets of regulations in this area, pulled 2 of those sets already, and this last set of regulations, which came out this past December 2011, and the related procedures to those regulations, are more than 300 pages. So it's a very technical area which the IRS obviously has been monitoring closely. But so have we. Ever since 2000, when I wrote my first article on this subject, because I felt taxpayers were capitalizing way too many things that should be written off as repairs, we have worked closely with both CPA firms nationwide doing repair versus capitalization reviews and the IRS. In fact, we're one of only a small handful of firms that has written commentary to the IRS all 3 times they've requested it regarding the regulations. In fact, they refer to our most recent commentary in this newest set of regulations. We have been hired to be tax expert witnesses for federal court, and we've helped taxpayers recover over $21 million in taxes in the last few years doing our repair versus capitalization analysis. Now back to your question regarding the roof repair for your client. What we would do is we would contact the roofing contractor, speak to them about what's being done, and determine if we can help lead this to being a repair. Now, however, if these costs need to be capitalized, the new regulations have a very beneficial rule that didn't exist under the old law, which is this. The roof that's being replaced will now be considered abandoned for income tax purposes and now can be written off. And we can help the taxpayer to identify the cost of the old roof that's now being abandoned. So either way, we can get a very good tax answer for your client. So once again, remember, MS Consultants is a firm that you can trust for all your real estate income tax needs, let it be cost segregation studies, energy studies, or repair versus capitalization reviews.